I'm going to start on my left. So I'm going to request Hitesh to share a little bit of his perspective on the sector, his investment thesis. When he invested in this segment, what are the opportunities, what are the challenges, and if he wants to also sort of share, given that he's invested in 2012, how have things turned out?
Yeah, sure. Thanks, Divya. So I think let me put in perspective with few facts and data about the agri warehousing sector. And if you see the present food grains and the cereals production in India is about 250 million metric ton. It's expected to grow to 283 million metric ton by end of 2021. However, the demand with the growing population would be close to 332 million metric tons. So it's a very scary situation where it would be a shortage of around 50 million metric ton. And how do we address this shortage? So a way to address this shortage is on the supply side you can think of increasing the production. While there are limitations in terms of increasing the production, because if you see our last 50 years, the area under cultivation in India is constant at or stagnant at 124 million hectares. So other component is to maybe increase the yield. Now, if we want to meet this demand, the yield per hectare has to go up from 1.9 metric ton to 2.4 metric ton. And also India fares very poorly in terms of yield vis-a-vis the developed countries like US or even countries like China on all parameters like tractors per hectare, or you take agri inputs, fertilizers per hectare. Yeah, so it's a very challenging task to increase the production. Yeah, the other aspect of is it is the agri supply chain wastages or inefficiencies. If we can address that, so every year we lose around 600 billion rupees in terms of due to the wastages or inefficiencies in the entire agri supply chain. And if we bifurcate this losses again into the large part of it is also attributed to the storage. So around 33% is attributed to the storage. And now if that according to me is the huge opportunity for this sector. So on the agri warehousing side, if we take the largely it is dominated by the government or the state cooperatives. Private sector is only to the extent of 17%. So present requirement for the warehousing in India is around 148 million metric tons. Out of that, there is a shortage of 40 million metric tons. So so there is a clear opportunity for the private players to kind of pitch in and address this gap. So having laid down this macro picture and why this sector is important from the from the perspective of the food security, we had laid down thesis that what kind of players we should engage in this sector. And we will, I think most of the players we had worked with them in terms of either banking or some other relationships. So when we started analyzing, we thought that a warehouse or a storage solution can be a real estate play or it can be a service play. And what we have seen is that when you start building up warehouses or the storage spaces, the payback or the returns on them would be at least 12-13 years. And the other thing which we observed was the change in the crop patterns. So a particular crop in a particular state, for few years, it stayed there, and then on it changed the complete pattern. So infrastructure created in a particular location or of a geography might become redundant. So then we thought that this will be more of a service-oriented play rather than an infrastructure play, and then we thought that asset-light model would be one of the key theses for us to look at. The players who are following asset-light model would be the contenders for our investment thesis. And then obviously after evaluating, the couple of players in the opportunity, we thought that SLCM was the best poised, with this criteria. And the other thing we found was that they had ability to manage the entire agri flow without, taking much of the risk on their books, So they were part of each of the segment into the agri ecosystem, but without taking risk on their books. So those were the things which, attracted us to SLCM. And in terms of hindsight, if I say, the thesis has worked out well. I think on the warehousing, with the key where we are focusing on the service play, we have created standard SOPs and also applied for a patent for that under the brand of AgriReach. So, and also on the back end, if you are warehousing and if it is supported by the front end integration of the warehouse, receipt funding, that creates a entire integrated model. And that's what, we've been trying to work out, and it is coming out very well. So I think this is my take on, on the sector and on the investment which you have made. I think maybe I'll ask Divya to, now when we can, during the, discussions, we'll be happy to kind of dwell upon more on this,
Yeah, thanks, Hitesh. So that's an interesting perspective, especially given that he's gone after the asset-light model, especially given that I'm sitting next to Piyush, who's done exactly the opposite. And I think he's fairly well set up to explain. Of course, we all know that Shubham has some of the fairly high quality infrastructure that they've invested in. And given that Hitesh has spoken about how the agri crop patterns keep changing. So Piyush, you need to share how have you been able to get comfortable behind the investment thesis of investing in infrastructure, and how has that panned out now with the benefit of hindsight as you think about it?
Thanks, Divya. Hello. Yes, so I think Hitesh has covered the what any investor looks at to kind of invest in warehousing or any other sector. So to start with, I'll give you a very macro view of the way we have looked at agri and allied sector over the last 10 years. We started investing in 2006, and since then we have been struggling to find the right company and the right promoter to invest in the agri space. At the macro level, it seemed that whichever sub-segment we looked at, whether it was agri-inputs, seeds, agrochemicals, or post-harvest processing, or the entire agri-logistics space, including warehousing, there was a definite demand-supply gap. There was a huge opportunity to create large businesses, but we really struggled to find dynamic entrepreneurs who were taking advantage of this opportunity. And also, I think over the last 10 years, the regulatory environment has improved, and operating environment has become far more stable. So these are some things which are very critical for an investor to start investing. And as this has happened specifically in the agri supply chain, we have seen a whole lot of investments. I think most of the larger players in the space has been able to raise money as the regulatory environment has improved, and we are seeing entrepreneurs taking the call to enter the space, and on the back of that, investment coming in. So now coming to the specific question that we asked about asset heavy. So I think when we started looking at the space, it was clear that the demand supply gap is huge, and there is space for guys to come in and create capacities for years and decades to come. And as long as you do it right, as long as you are able to manage your operations efficiently, there is not going to be an adverse demand supply situation which will come in. Having said that, when we met the Shubham management, we saw that there was this both promoter and management team which understood the space, had already invested a lot in the business, and created infrastructure in critical mandis or locations where we believed that the the demand supply was far more favorable than some of the locations that they're not chosen. So asset heavy is what they were when our money went in 2014. However, it was a stated strategy that you would kind of find the right mix. So it's just to kind of keep creating infrastructure to be able to make a meaningful dent in creating infrastructure would take decades. So they're close to about 2 million ton capacity now. From here, if they have to go to 5x their capacity, you just can't do it by setting up your own warehouses. So there needs to be a mix. There needs you need to have leased warehouses. You need to go out there and find the right locations where there is a continuous demand supply gap, and you fill in those. So asset heavy, I think, or asset light is not really the key question here. One is of the services that you add to it, because whether you do it asset light or asset heavy, plain vanilla warehousing, we understood, is not really where you can make money. You need to add the value added services on to all the players in the segment, whether it is to your customers, large private players, whether you do procurement for them, whether you do collateral management for them, whether you arrange funding for them, or basic or other basic services. So you need to do all of this to be able to make money. I think that's something that has played out well for us. I think operating environment has been challenging last 2 years with the failure of monsoon, and there have been changes in the way the procurement is being done by FCIS. So those have had an impact. And but I think overall we are fairly happy with the way things have played out. And as we see regulation continuously evolving, I think the investor interest broadly in the space we see is only increasing from here.
Thank you, Piyush. So Anurag, coming to you, obviously, given that you speak to multiple investors and you've led many of the mandates where money has been raised in the past 2 to 3 years. And I was sort of doing the mental maths. I think roughly 2,500 crores has been invested in the last 3 years in this segment by mostly private equity investors. So if you do a 3x, and this started in 2012 till 2015 or so, so people are expecting, say, a 7,500 crore sort of value creation in one way or the other, right? So we'd love to hear from you. What's your perspective on what's been the investment thesis? How's it turning out? Where do you think the value creation or exit options for some of these investors are going to come from?
Sure. Thank you, Divya. Thank you, Divya, and good afternoon, ladies and gentlemen. I'll touch upon this. So let me first start with the business model, and I was hearing Hitesh and Piyush. So the first thing that I would like to highlight here is that investors understand this is a very operationally intensive business and it requires a hands-on management team. But having said that, every company is going to be unique in itself. Every company will have to find a niche for itself. There will be companies which will go for a, let's say, asset light model. There will be companies which will go and create investment in warehouses. There will be companies which will get into some particular commodities, invest big time into that, get vertically integrated. So there's no single model which can succeed, and investors appreciate that. And that's the reason why if you look at the market landscape today, each player has got some kind of expertise which they are kind of banking on, and investors are supporting them. Having said that, another aspect that is coming out in our discussion with investors is there are broadly two kind of categories of investors. Those investors which are banking on, let's say, services model. They want the companies to go and expand into services. If you are doing 3 things today, why don't you get and do 2 more things which are where you have a synergy, where you have a strength, and expand your service offering. But at the same point of time, they are not that comfortable getting into, let's say, proprietary trading, getting into taking pricing call, getting into commodities. Those are the investors which are more, they are keeping a hands-off approach from the proprietary trading part, but at the same point in time, they want to expand the business. Having said that, there are also investors in the market which are more comfortable because of their international experience in banking a particular commodity. So for example, if I'm into coffee, let me get deep into coffee, let me get into cultivation, let me have stake in cultivation companies, let me get into harvesting, processing, financing of coffee traders, and let me do everything in coffee. So both kind of models are prevailing in the market, and there is enough appetite in the investing community to support players, provided the investors get comfortable with each of the company. The company should not just blindly follow some model because X is doing this, X is successful, I will also do that. That kind of approach is not going to work with investors anymore. As long as you are able to demonstrate what is your capability and how you are going to succeed, investors are going to back you. Coming to the main point that Divya has raised, a lot of money has been invested in last 3-4 years in the sector. What investors are thinking? All of this is financial investors. Typically, they come with a time frame of 4 to 5 years for the investment. Investment started way back in 2012. Some of them may be looking for exit. Where is the exit going to come from? Typically, financial investors look for two kind of exit option. Either it's an initial public offering or some kind of strategic sale to a strategic investor, whether domestic or international. Now, I think that's where a bit of challenge is going to come because if you look at the players in the sectors today in India, there are hardly any international strategic player. All the large international strategic players have yet not stepped into India, apart from one or two. The reason being the size and scale of the business. The size and scale of the business, though it is growing at a very high rate, still is very small from their perspective. If you just add the top line of all the established players in this sector, it will not even add up to $150 million. That's the key reason why some of the international strategic investors are this sector is not on their radar. And that is also adding as some kind of a challenge for the financial investors to look in because when they look at the investment, they want to see how the exit is going to come from. I think that's where if we are able to expand our service offering, and the point that I would want to make is today, for example, these companies are in post-harvest value chain. In the discussion before this, there was a discussion going on where somebody mentioned that post-harvest warehousing is finance around 40,000 crore, whereas pre-harvest it's 8 lakh crore. Now just look at the difference in numbers. If we are able to expand our service offering and cover some part of pre-harvest value chain as well, that will give us a meaningful scale and that will make it more attractive not only for international strategic investors but the financial investors in turn. The second point that I would want to highlight is there will be product innovation that will be required. The point that both Hitesh and Piyush made, though it appears contrary, actually are not. See, what happens is when I invest in my own warehousing capacity, my costs are upfront and my returns are going to pan out over the next 10 to 15 years. There will be, but what I'm going to generate for the market is dependent on market. There will be up cycles, there will be down cycles. And at the time of down cycles, I will not be able to even recover my cost of capital from a particular warehouse. Now, when the financial investor come in, they come in with a defined time frame, let's say 4 to 5 years. If the down cycle is long enough, let's say 2-3 years, it coincides with their exit, it becomes very difficult for them to realize their investment. And that's the reason why many financial investors are staying away from investing in warehousing capacity. Now, if we can have some kind of a product, for the sake of better word, something like REIT structure, where operational warehouses can be, let's say, domiciled into a listed vehicle, where long-term insurance funds or pension funds come and invest, and since it's a listed vehicle, it will have liquidity, that will free up a lot of pressure on the investing company as well as the financial investors to invest in those capacities, and they'll be able to take those warehouses on long-term lease. I want to leave that thought with everybody here. That is something that we should work upon, and that should go and give a good solution to the sector. The last point that I want to make is on the corporate governance side. Corporate governance has been continuous focus of the financial investors, but going forward, I feel it's going to get even more and more important. The kind of demand that financial investors are going to raise from investing company in terms of resource allocation as well as manpower allocation for corporate governance is only going to increase. It's becoming a crucial hygiene factor. And they are not only interested in what kind of protocols you have kind of put on your manual, they want to see how you're implementing them. There is becoming a zero tolerance for any kind of deviation. I think that is something that we need to be very mindful of. That's it from my side, Divya. Thank you.
I think most of the factors on the investment thesis that I wanted to talk about have mostly been spoken, but I'll just quickly run through them. I mean, there were 5 key points in our investment thesis when we invested in NBHC, and the ones which are been spoken about, I won't go into detail. I think there was a size of market everybody's spoken about. I think there's this whole theme of formalization of Indian agriculture, which we've been thinking as a theme to invest behind. Movement from cash to formal economy, better supply chain linkages, access to agri-exchange with increasing depth on the exchange are sort of things which are, I think, moving the formalization of this. And if you look at which are the sort of large agri-Indian corporates, there aren't that many as there should be. So we've always felt that there is this opportunity for us to back the formalization of the Indian agriculture. Of course, Indian agri itself is 15-16 lakh crores, so it's a large number. Then the other part of this formalization is increase in formal financing of agri. And especially when we looked at, NBHC, we felt that the post-harvest financing, which is in a manner of speaking a lot more secure than the pre-harvest financing, at least the degrees of losses are a lot less, and the commodity is saleable and tradable, should lead to far lower losses, and should increase the formal financing. And the money lender's money should potentially be transposed with the bank funding it. Then, of course, I think better management of risk. We, 6 years ago till today, I think some of the organizations like NCML, NBHC, which have been there for the last 8 to 9 years, have shown that they can manage a distributed base of warehouses and agri-commodity across the country. And, managing that risk of controlling some of these warehouses with having one security guard and your audit processes was something that we needed to get comfortable with, that we did. And last but not the least is the point that Anurag made about improving governance standards. So when we thought of the industry, a key theme for us was that because we as a fund have stayed away from any large industries like infrastructure, PPP, where we felt that the kind of practices are not platinum standard from a governance perspective, and we would not be able to make a play in them. And at least our theme was that governance standards in this sector, while they need clearly some improvement, but they are headed there. So that's how we found the industry attractive, and obviously NBHC has been a good leader. As I look back on our investment for 2.5 years, I think NBHC has a specific situation. We'll keep that out. But we've seen a business which has grown literally 30% plus CAGR, and that is in an environment where the monsoon's not been good. So I think that fundamentally talks a little bit about, one, the tailwind that we've had, and second, it talks a little bit about the quality of the organization that one is trying to build. I genuinely feel that there is a requirement for a very high quality brand, say like a CRISIL, right? Because in the end, the business that NBHC is in, or that many of us are in, is a business of trust. We're running a locker for other sort of retail and institutional customers. And you would like to buy a locker from entities that you can fundamentally, mentally feel comfortable banking with. And that's what we need to get to. So, and I think that's part of the vision and the roadmap that we feel that we've been on. I will say that this sector does move 2 steps forward, 1 step back, like big parts of our country. Clearly we are directionally headed upwards, but there have been material challenges across multiple states, thanks to the drought and other challenges, which I think we are trying to sort of find a way to resolve for. So that's a little bit on us and our thinking. I'm going to get to a little bit sort of chapter 2 of our panel discussion and pick up a few key issues and request some of our panelists to talk about them. So Hitesh, any thinking on, from a regulatory aspect, how do you think about the government, and this could be, laws made by the central government, state government, RBI, SEBI, which is now the regulator of the exchange. How do you think about that? Which are the areas that you would like to see incremental improvements? What structurally happened that has made you comfortable in the last few years?
So I think one important aspect is, which we have seen in last 2 years, is the implementation of WDR Act, So that is now being pushed to a greater extent, And then we have seen the sector needs, if it needs to grow, it needs transparency and, the confidence. So, and that, the confidence will come in with, the transparency and, more better practices. So on the regulatory front, I think there is more need, because this industry is a very sunrise industry when we talk about private sector, participation. So if you see, it's just, 7-8 years old, where the players, majority of the players have emerged, right? So I think a lot more needs to be done, and there I would suggest that it would be a approach where, the regulators and the participants, or the, the WSP, warehouse service providers, both, jointly, work together. The sector hits its own challenges, if we look back, 2 years back, what happened with, NSEL, that had created a lot of, trust deficit, amongst all the stakeholders. Post that, I think at FMC and at SEBI, a lot of, rules, they have kind of come out with to regulate and, create more transparency, and also the stakeholders, like, customers or, the warehouse service providers, they also realized and taken the cognizance of this fact that if this industry needs to grow, we need to create a very transparent mechanism. And I think the lot of work is getting done in that direction, and that is going to help the industry to grow in a big way.
Sure. Piyush, any thoughts you want to add to that?
I think Hitesh has covered it mostly, but just one thing if I were to add is that when one looks at this industry structure where there is a very large demand-supply gap, there is at one side very large number of farmer community that you're dealing with, one would think that the economics of the business is going to be very good. Now, however, what we have seen over this period is that one is the basic warehouse setting up and making money. It takes it with the payback periods are 7 to 8 years. If you're lucky, it can go into double digits. And even other businesses are fairly competitive, extremely competitive. Collateral management, the kind of remuneration that the companies get. Now, how do the market participants come together to make sure that this, and that's what's going to get investors in, if it is remunerative and enough for players to do business in this. So while regulation has evolved, I think there is more that market participants and regulators can do so that it is, if not a very largely profit-making, but at least it makes sense for investors to come in and make investments and grow these businesses.
I'll share two bit of, as we've thought about some of the regulations by product, right? In collateral management, one of the things that we've been thinking, like on the mortgages side, NHB has created SARSAI, which is a database for where all mortgages that get registered by any entity in the country, which is an HFC, and it's a centralized database that they need to maintain with the KYC of the customer and a unique mortgage number. It makes sure that the same mortgage is not financed twice. And I think something equivalent needs to be done on the collateral management side for perhaps the Reserve Bank or some equivalent regulator to sort of create a database, because if there's a customer commodity that's being stored, and that's also, we've spoke in the prior session of an NOC from a bank, but the moment you create a centralized database of warehouse receipt products and with the name of the entity and the commodity stored, then it will materially decrease the risk that exists today in this space. The second thing is that along with that, the pricing of different commodities is specifically by banks. So, NPAs that happen in this segment get materially delayed, especially because if the pricing, that is where at which the banks are actually valuing the commodity in their portfolio, is not appropriate and the pricing falls. And typically in our country, once price starts falling, it heads south even further. So the bank needs to liquidate its portfolio. And I think that's again something for Reserve Bank potentially to take cognizance of, like they've been doing in many other ways on the NPA side, to make sure that any commodity financed by banks is appropriately priced. And these prices are available by mandi, by commodity. Right, NCDX does a great job of also price pooling. So some of those prices are also available. That a lot of their portfolios are appropriately market priced, market benchmarked. And I think if these couple of sort of regulatory improvements could happen, potentially the risk in the CM business could go down materially. On the professional warehousing side, I think the biggest challenge that exists today is buying land in cash. That's the reality of our country. It's a huge challenge for entities which are completely professionally run. It's very tough to buy land in our country, and the government needs to find a way to solve for that, either provide some land banks And I'm not saying they should be provided at subsidized rates. They can be provided at market rates. But that's a big challenge. And of course, I think Anurag touched about having long-term investors in land and warehouse construction would be helpful. I'll talk a little bit about exchange. I'm sure Samir was here yesterday and he spoke about that. But I think SEBI is seized with the matter, but deepening the exchange, allowing FIIs, allowing options, allowing multiple products, allowing banks to hedge. I think all of that will go a long way in I think improving the sector dynamics, which needs to further improve. I mean, those were some of the regulatory thoughts. I think Piyush spoke about industry association creation and some sort of a working together of the industry association, which I think many of us would agree with. Let me get to Anurag with one other theme question. Anurag, as you've seen this sector over the last 3 to 4 years, what's been the competitive intensity among different players? How do you think that's evolved? And what is that doing to the structure? Is it improving, getting worse? Is it different in different parts of the country? How is that moving along?
I think the way you partly answered the question yourself. So what's happening is, one, the competitive intensity differs from business to business, and two, it also differs from region to region. So for example, if you, let's say, start with warehousing receipt, yes, the intensity has increased over the last 3-4 years. The price that the collateral managers are able to charge is actually inching downwards. But having said that, there are pockets, there are regions where one particular player is strong and he's kind of able to hold on to the market share. What is also happening is, like I said, there are, let's say if you talk of top 3-4 players, each of these 3-4 players are trying to expand into new businesses. For example, somebody is focusing on, let's say, pulses. I will go and get into pulses. I'm talking about Sohan Lal. Whether it's India, whether it's Myanmar, or whether it's any other geography, Sri Shubham has identified it makes sense to create warehousing capacity. Somebody is doing agri-financing. So players are actually tackling competitive intensity by focusing more and more into their core competence. But having said that, the sector is witnessing huge competition, particularly in professional warehousing and collateral management. If you talk of financing part, the NBFC piece, what we have seen is a lot of new players are getting into the sector. The players who are not traditionally into warehousing and collateral management, who are because they have a balance sheet and they have a financing business, whether it's auto financing, whether it's some other financing piece, they are getting into agriculture financing post-harvest. Now, if you look at from the sector perspective, that's very good. But in the short term, that's proving very competitive for the incumbent, and it's for the incumbents to kind of figure out how they want to position themselves, how they want to differentiate. Because at the end of the day, from the borrower perspective, from the client perspective, if he is getting a services at a cheaper rate from X or Y, I mean, he is going to prefer what works best for him. There is a tendency in the business to get commoditized. It's very difficult to continuously differentiate yourself. I think that's where the challenge lies.
Any thoughts from my other panelists on the competitive intensity or ways of building competitive advantages that you've seen that have worked in this space?
So I think technology would be definitely a differentiator, because what we have seen is, on the when you are a service provider, the expectations from your customers are increasing day by day. So just to give an example, when a lorry used to arrive at the warehouse and the customer used to get intimation, after 3 days that the goods have arrived at the warehouse. So that 3 days used to be a too long a period. So, customers are expecting that why it cannot happen on the go. So I think, at SLCM, we focused on that, and we have completely created the back-end technology solutions where, the end customers, they get real-time updates about the movements of their stock. Yeah. And it's also back-end, it is integrated with your ERP systems. So I think, things like, this, would make a lot of difference in terms of, creating that customer delight and creating a more transparent, way of doing business.
So just one more thing to add to that is strong corporate governance. So as business is becoming more and more institutional with larger clients and exchanges and large private sectors, large private sector food companies. So having a very strong corporate governance and ethical business practices, strong management team kind of provides that trust which you spoke about to your customers to be able to really build and scale this business. And obviously, I think technology plays an important role to kind of deliver that service. Operational efficiency does that as well. But to begin with, I think there has to be the trust factor which is built in where what has been lacking, there has always been a lot of warehouse which has been there in the warehousing capacity which has been there in the country. What is it that the organized sector is getting in? It's not just a better service, it's a trust that when this deposited with a large warehouse service provider, then the collateral management service which will be provided will be beyond doubt the best in class.
Thank you, Piyush. So continuing with you, Piyush, what do you think about one of the key players in this sector, and why should I say the largest player in this sector, whichever part of the value chain that you pick up is the government, right? In procurement, in financing, in warehousing. I think the only service that the government perhaps doesn't do is that of a collateral manager, although that also CWC, SWC sort of partly do it. What's your perspective? Is that an opportunity, a challenge? And then, of course, there is central government, government-owned institutions. I'm keeping banks out for a minute. And then there is state governments. How has that evolved? Do you see that as an opportunity, a challenge?
So I think at one level it's definitely an opportunity. One cannot ignore that government will continue to play a very important role in the sector. There is a huge procurement that they do, and there are a large number of warehouses that are maybe 30-40% of the total capacity which is government owned. So there is an opportunity to work with them. So there is a lot of work that Shubham does in that space where they manage some warehouses for government, where they are able to improve the services which are provided at these warehouses, as well as does a fair bit of procurement also for FCI. Having said that, I think there needs to be a mix because one cannot be dependent upon government to kind of build this business. One needs to look at the private sector, and one needs to have a diversified mix in your client profile. So that's the way we have approached this. So it's definitely an opportunity, but the challenge of dealing with multiple agencies is there, and hence you kind of diversify them.
Anurag, how have different players thought about it, especially dealing and working with the government? Is that process deepening? I know the government has launched the procurement business in some parts of the country, which is now being done by warehouse service providers. Government is using warehouse service providers, for example, in Rajasthan, in Andhra, in Madhya Pradesh, and renting their capacity. So on and so forth. So how have some of these things evolved and worked out?
So Divya, what has come out is government is the biggest elephant in the room. Investors appreciate that, understand that. But at the same point of time, there are mixed feeling of investors towards the government. While they are very off dealing with the government because they are not sure how the government is going to react, or whether they are going to honor the contracts. If there is particularly a legacy of something going bad, the investors become all the more wary. But at the same point of time, investors understand the biggest chunk of business going forward can actually come from the government. If some of the things that government has been talking of, for example, after Shanta Committee report, if the FCA procurement move towards eastern or southern states, some of the states like West Bengal have been talking of getting into involving PPP in the procurement, that will give a large and chunky opportunities to some of these companies, and which investors don't want to let go of. But at the same point of time, they want to be careful about how they're going to approach it, how they're going to get into the business, and maybe they will take tentative steps in the beginning. I think what is going to happen is there will be clear differentiation over a period of time in terms of, in the investor's mind, in terms of which government they are dealing with. So today, for example, also you have impression of state government. This state government is good, this is investor friendly, this is less investor friendly. I think that perception is going to build over a period of time, and that's how the investors are going to take their call. They will prefer certain governments, they will want to continuously deal with them, irrespective of the party in power, and certain states are likely to lose behind.
Thank you. I know we are perhaps among the final few sessions standing between you and lunch. So with that, I think we've had a discussion on a few topics. We can open up if there are any questions from anyone. I see one on the right-hand side.
We have seen in pharma, food products, and the outsourced warehouses, sector warehouses have come up, and government has promoted warehouse in zones, like we have in different universities, or in Turkey and other places in Bengal. Now, can we not have agri warehouse in zones, where maybe in the districts and others, and where the common infrastructure are created, transportation will be much more easier, and there will be a lot of advantages. Is it worth looking at it? What are the views of the panel? Then the investors can be also promoted to come work there. They will avail of the facilities there.
In fact, you are absolutely right. Those agri-processing zones are required, and actually governments are working towards it. So if you look at it, for example, I know of a particular zone that has come up in Madhya Pradesh near Itarsi. That's a dedicated agri-processing zone with a dedicated warehouse and agri-handling facility. And I know of a couple of other locations. One is in Uttarakhand, where these zones are being proposed and likely to come up. It's definitely required at the end of the day. But having said that, it has to be a commercially viable proposition. It has to compete with whether FMCG or pharma or let's say e-commerce logistics. At the end of the day, land is limited. And if something is making more sense for the landholder, he is going to give it to them. He is not going to give it to agriculture.
And this could be an opportunity for consultancy firm to carry out studies, optimization studies for location, capacity, then investment, mechanization, and IT automation.
Definitely, it will be
which will bring a lot of efficiency in the system.
Yes, it will be opportunity for all the stakeholders, including consultants.
Yeah, my question is Mr. Sehgal, sir.
Hi.
Could you please elaborate why post-harvesting investment is better than pre-harvesting investment?
Sorry, was that question directed towards?
Yeah,
For me?
Yeah, yeah.
Okay.
Please.
Yeah, thank you. No, so I think the point that I made, I'm not suggesting that post-harvest investing is better than pre-harvest investing. The point that I was making is that from a bank perspective, financing for the post-harvest is more secure because you have a liquid commodity, which you control, and that's the liquid commodity which you're financing. You're taking a margin and you're giving a LTV which is say 70% of that commodity, right? So you're building in enough buffer, and if you have good control of the commodity, then the likelihood of a loss is not high. So you generally have something with you. So I think that's the point that I was making, and especially when the bank finance is replacing Artiya finance at 24 to 30% by something that the bank gives out at 10, 11%, it also creates a lot of value for the depositor of the commodity. I think that's okay. Mr. Garg.
What do you think about the private mandis or online trading platform for selling the outlet of farmers of their crop and all that? And my second question with Piyush about, we have already discussed our own capacity. So what do you think? Still, you think that the ROI or payback period and without the subsidy, government does not have a big Gramin Bharan Yojana and all that. Still, you think that the construction of warehouse, including the cost of land, without considering the appreciation value of the land, is it beneficial for a warehousing company?
Let me start. Yeah. So on your first question on the private mandis and online facilities for e-commerce of agriculture. So both the initiatives, I think, are at very early stages. There are companies which have ventured into private mandis, and a lot of players are trying to get into online sale and purchase of the goods. what need to be seen is how it pans out. There is a lot of hope from both the initiatives, but both the initiatives are going to compete with existing physical supply chain. Whether it's APMC or whether there's a local guy who is managing the commodity, and how the dynamics are going to play out, how much you are going to be successful, whether your ability to liquidate from one state to another actually pans out, or there is some kind of regulatory intervention which happens. I think this is something that need to be seen. So maybe next 2-3 years will decide how these initiatives pan out, but if the potential for both the initiatives is very high, one. Two, farmers can actually benefit a lot if they are able to realize the full potential, because then they are actually free from the clutches of intermediaries. So to that extent, there's a lot of hope riding on both the initiatives, but I think it's still work in progress.
But what will happen? Real estate investors will be encouraged to invest if there is a land available around the road is there, and they will rent it out to the around management agencies. So that has been always the trend. Big Bazaar and others, their warehouse does not belong to them. They have taken up on rental, this rental. So similar concept need to come in every warehouse.
So in a way, it's related. Even for an online sale or a private mandi to materialize, you need a physical stock. It need to be stored somewhere, and somebody need to take ownership. Yes, I'm going to guarantee delivery of that much. So to that extent, your point is related. There will be always opportunity for creation and management of warehousing facility. The question is going to be whether the existing facility is good enough for the requirement, one, and two, whether the location is viable or not.
Yeah. So I'll try to answer your question in several parts. So one is any capacity in warehousing will have to be created to increase the total capacities which increase in the country. So whether a particular warehouse service provider creates it or acquires on lease, but in the system, someone has to create it. So it obviously there is warehousing capacity which is getting created. The basic economics of just doing warehousing is probably not as lucrative for a financial investor as probably an entrepreneur might have a 10-15 year horizon and might also look at appreciation of the underlying land. But for a financial investor who comes in with a 4 to 6 year perspective, he has to create value during that period only. So both the ROI just by doing warehousing is not lucrative. Second is there is only that much that you can do in trying to create it yourself. So it's a very time consuming process just from start of buying of land to creation of that infrastructure, and also extremely capital intensive. Capital is not available to all companies in the same proportion. So there needs to be a mix. You need to go out and procure enough warehouses on lease as well to increase your capacities. That's the only way you are going to kind of increase your value in the company. Second is that the ROI is only going to improve if you are going to do all ancillary services as well alongside, because otherwise standalone would not really make sense, at least not for financial investment.
How the warehouse built up in Bhiwandi, Ghaziabad and Dhanpuri? Bhiwandi has so many warehouses. How the investors go? They must have got some return on it. Bhiwandi warehouses.
So I'm going to try and answer that, and then we will move on from this topic. I think if not just in Bhiwandi, if you look at it, there are large number of warehouses across the country, right, which people have set up. And traditionally, what's been the thesis behind it? Part of the thesis, I understand, is obviously about earning rental income, but part of the thesis has also been land appreciation over a period of time, right? And that land appreciation also goes to the owner of the warehouse, eventually when he or she decides to sell it. As a lot of the investors sitting around the table, I don't think we care as much about land appreciation over a 10-year time frame. We may be in for 6 years, 7 years, plus you're selling it as a going concern. So you're not going to value the underlying land at the price of that land, right? So therefore, what an individual entrepreneur may think, an organization can potentially think differentially, yeah? Okay, with that, we're going to call the panel to a close. So I'd like to thank my co-panelists for joining us. Thank you very much.